Hello, good morning. It's Thursday the 14th. I'm FX Plu and I'm back under the umbrella for a rather wet and muddy market brief. So we saw a new record set yesterday, 1,564 COVID deaths in a day. Pretty grim. It provides a reality check over any excitement about the vaccine rollout. That project is fast becoming an uphill race as the NHS gets closer to being overwhelmed. There is a little good news today though. They start testing vaccine delivery via the pharmacy network in an effort to broaden the delivery footprint. Government borrowing is already at peacetime record levels, but we're seeing calls for more and more support to ease the economic burden. Previous measures like the VAT cut and the stamp duty holiday may well need an extension, as we'll be far from business as usual when those are set to expire. Andrew Bailey's been on. He's dismissed talk of an interest rate cut anytime soon. He remains sceptical about negative rates, and it looks more likely that the Bank of England want to see more data from the vaccination efforts before any further stimulus is put in place. In the market, sterling traded between 136 and 137 against the dollar yesterday, and we opened this morning around 136.30. So Trump's been on. All the fruit-based chat is confusing, and he tweeted for clarity asking, "First I'm orange, now I'm peach, what's going on?" Only joking, of course. He can't tweet anything since his ban, but he has been impeached though. The first president to be impeached twice. Good Lord. His trial in the Senate, which will need a 2/3 majority ruling, won't happen until after Biden has taken over as POTUS, so a presidential pardon for himself is off the table. December inflation data showed price increases remain pretty benign. The fear remains that inflation is suppressed by the pandemic and may explode higher once the delivery of the vaccine takes hold, and that's something the Fed are keeping an eye on. But for now, the data confirms that new job creation is much more of a priority, and a job creation scheme needs to be accelerated in the US. Over in the Eurozone, inflation is also a concern for the ECB. Their estimates put inflation at 1% this year and only 1.4% by next year, both of which are way below their 2% target. The relative strength of the euro helps keep inflation controlled, but it does make exports more expensive, and it's tricky to use currency in the fight against inflation due to market volatility. Yesterday, the euro trimmed the sails slightly and euro dollar fell to 121.40, and we kick off this morning only slightly higher, around 121.50. Right, that's it from me. I hope things brighten up for you a little bit today, and do join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.